Hi everyone, welcome back to the US CPA classes for regulation exam. In this particular video, I'll be walking you through on federal taxation of property transaction. We'll be covering the topic capital gain and loss limitation. We'll be covering categories of gain or loss on assets. We'll be covering capital loss limitation and the disallowed losses. So let's dive into to understand more in detail about all such categories. So next is capital gain and loss limitation. So loss limitation, first, like how do you calculate the capital gain, realized capital gain? So realized capital gain is amount which you have realized minus the adjusted basis of asset sold or transferred. So basis of asset we already have studied, which include cost of purchase, insurance, freight, installation cost, everything, minus if there is like any depreciation, amortization, depletion, plus if there is any cost of improvement you have incurred, right? So that is the adjusted basis of asset which you are selling. So difference between these two is realized gain. But what is amount realized? Amount realized is equal to the gross selling price, which is cash you are receiving, or if you are receiving anything in kind, then fair market value of the asset which you are receiving, minus if you are paying any selling expense like broker commission or lawyer fees or stamp duty, right? All those things will be adjusted, or any advertisement cost. Clear everyone? So far so good. Next table, if you see, this we have already covered yesterday. It is like kind of repetition. Category of gain or loss, capital gain or loss, or ordinary gain or loss, right? But important thing here is the capital loss limitation. If you see, the capital loss that exceed the capital gain in a year may be used to offset capital gain or as a deduction against the ordinary income up to $3,000. Just underline this word or note it down this word somewhere, up to $3,000 in any one tax year. So net capital loss in excess of $3,000 can be carried forward infinitely until the amount is exhausted. What does it mean? So before we get into the mean, let's jump into this small table. So this is a netting off process for long-term and short-term capital gain, right? So how you need to do and how it is different from the netting off procedure we all have studied in India. Long-term capital gain in India is adjusted only against long-term capital loss. Same way, short-term capital gain can only adjust against short-term capital loss. This is what we all have learned in India. But in US, there is one additional step, that is net long-term capital gain or loss, or net short-term capital gain or loss can also be further adjusted, and it may result into net gain or loss, right? Any doubt here on the netting process, or anything you need more clarification here? So there is one more step we need to do in the US which we are not exposed to do in India, that is netting off the long-term capital gain or loss against the short-term capital gain or loss after the original netting process. It will give you the net capital gain or loss. It can be short-term or it can be long-term. Clear this one, or any doubt here? Huh?
Yes.
Everyone comfortable? Manoj, Shambhu, Pooja.
Sir,
Yes, sir.
this content is not included that you shared with us.
No, I think this is only I've shared. This is next
No.
page.
I am seeing we have only 4.1.6, and after that,
Yes, sir. Yes, sir.
No,
We have only till
Okay, okay,
4.1.6.
okay. I'll send you. So maybe my mistake. So no worries. I'll send you this.
Okay, thanks.
Hmm. Okay. So sorry, my bad. So this is like, but conceptually you all comfortable? I'll send you the notes updated. Don't worry. But conceptually, everyone understood?
Yes, sir.
So this is how the netting of losses in United States of America, which is slightly different than what we are exposed to in India. Last three line, if you see here, the result is either a net gain or a net loss. If it is a short-term capital gain or loss, it will give a treatment as ordinary income treatment. If it is long-term capital gain or loss, it will be at a lower tax rate compared to normal tax rate. Now coming back to this point, capital loss limitation. Capital loss limitation is capital loss that exceeds the capital gain in a year may be used to offset capital gain or as a deduction against the ordinary income up to $3,000. What does it say? It says first you need to adjust capital loss against the respective capital gain, right? Then after on phase 2, the long-term and short-term capital gain or loss can adjust it. And finally, the resultant amount, if that is a capital loss, right? So up to first $3,000, you can adjust against the ordinary income, and remaining capital gain, remaining capital loss can be carried forward for future year. This is what it means. So there are four phases. First is you have short-term capital gain and short-term capital loss, and below you have long-term capital gain, long-term capital loss. They first need to adjust individually. Short-term capital loss will adjust against short-term capital gain. Long-term capital loss will adjust against long-term capital gain, and it will result into net short-term capital gain or loss, net long-term capital gain or loss. Then both of them will be adjusted, and it will final result into either a capital gain or a capital loss. If it is a capital gain, then it is taxable as per the respective capital gain category. If it is a capital loss, the net result which we have discussed here, if this net result is a loss, then up to first $3,000 of loss, you can adjust against the ordinary income, and the remaining capital loss can be carry forward for future year, right? So this is what it means. Clear, everyone?
Sir, is there any schedule for presentation,
Like, what do you mean by
like
schedule?
schedule for capital gain and loss calculation when we will be
Yeah,
reporting to
there,
the?
there will be like on time will be some illustration, and there would be like certain multiple choice question, like how it comes in exam, we'll be discussing. Yeah, that will be there,
Okay.
right? The next small topic is excess business loss. Excess business loss is actually excess of the taxpayer aggregated deduction attributable to his trade or business over the sum of taxpayer adjusted gross income plus $270,000 for single and $540,000 for married filing jointly. Excess loss are carried forward as net operating loss and allowed for the future year subject to net operating loss limitation. It is like infinitely currently. So net operating loss can be carried forward infinitely.
Sir, I would like to stop you for one point.
Mhm.
Can you scroll little bit one line above? Yeah, just it. There is a point you have written that loss limitation rules applicable to individual under section 4610
Mhm.
for taxable year 2017 till 2029.
Mhm.
And below line capital loss limitation, you are
Mhm.
mentioning that net capital loss in excess of 3000 can be carried forward indefinitely until it's exhausted.
Mm-hmm.
So it's like contradictory that first the law is applicable till to
Yeah,
2029.
no, yeah, very good point, Rakesh. So let me elaborate on this. So what they are saying, this came under TCJ Act 2017, that the provision of this capital loss limitation, right? So what they are saying, any capital loss from the year December 2017 to 2029, for those kind of losses, this provision is allowed. So it is allowed for 2017, 18, 19, 20, 21 up to 2029, right? The provision is this, that the capital loss up to $3,000 you can adjust against ordinary income, and if there is remaining, that can be carried forward infinitely for future year, because normally the capital loss carry forward provision is 8 years. But under the TCJ Act, it has been approved infinitely for these year losses. So any losses after 2029, right, at that point of time, they may revisit. Last year, this time was 2017 to 2026. So in the current finance bill, they have increased the limit from 26 to 29.
So you're saying that even in year 2031, any loss that you are trying to cover, but it happens to be in the period of 2017 till 2029, you can carry forward for future years.
Yes.
And for future year income or loss, they will be redefining the new laws, whether
No,
any loss happens after.
two things here, Rakesh. One is, in any of these 12 year, if there is a capital loss more than $3,000, that can be carried forward infinite. But if there was any loss before 2017, that has a time limitation of 5 year for carry forward or 8 year of carry forward, right? Same way,
Okay.
any capital loss after 29, let's assume in 2030. So normal law is it can carry forward for 8 years. But in these 12 years, if there is a capital loss, that can be carried forward infinite.
Okay. So in simple term, this act TCGA
Yes.
2017 will be applicable for any loss during this period of 2017 till 2029.
Yes, yes, absolutely right.
Yeah.
Right, everyone? Very good point, Shambhu. Oh, sorry, Rakesh. Next is disallowed losses. So disallowed losses include, like I would say, deferment of losses also. So first is hobby loss. If you have any income from hobby and you are generating any capital gain on account of that, so that is not deductible loss, right? Because that is considered as personal nature. So hobby are divided into two parts. One is, out of hobby, you do something. For example, you are working in any organization, and that organization has, you can say, planned a family day, right? And on the family day, you have a hobby of singing, and you are singing over there, and then maybe, like some people have given you few gifts out of the love, affection, or maybe something they like about the song we have sung, right? So that is considered as hobby income. And same way, if there are any expenses you have incurred for the hobby, let's say you purchase a guitar or you purchase a piano, or you have invested some money to going to that particular place for singing, right? So you cannot claim those expenses or those deduction, because that is personal nature. But on the other hand, if hobby is your business, right? For example, like initially you have started singing the songs, like out of hobby, but slowly and gradually you converted that into your profession. So then it will be your professional income and loss, right? And then all the deductions or expenses similar to business nature is being allowed. But if it is just a hobby, then the deduction is not allowed because it's your personal thing. Make sense? Right?
Yes, sir. Yeah.
Second is, if you look at the right hand side, personal use asset, right? So personal use asset here, like most of the students get confused with the personal asset or personal use asset. If you remember yesterday, we discussed there are two type of assets, real property and personal property, right? Do you remember that?
Yes, sir.
Right? So in the personal property, what we have discussed?
Sir, immovable assets,
No,
but
movable.
they are used
Movable.
in business activity.
Movable. Movable assets used for trade and business purpose, right? But here the term is personal use asset. It means, for example, your personal car, your personal mobile, your personal laptop, right? So
Yes.
if there is any loss on sale of personal property, for example, you have car for your personal use, and after 2-3 years of using the car, you are selling it, and that resulted into any loss. So that loss you cannot claim for income tax return because that is your personal loss. But on the contrary, if you have generated profit, right? For example, like I was doing audit of a company here in India. I'm not sure you know or no. Goodyear tires, right? Have you guys heard about them?
Yes, sir.
Yes,
We
yes.
use a
Right.
lot.
So I was auditing, like that company, and they have a like zonal office in Mumbai. So I visited Mumbai for auditing the zonal office, and the you can say zonal head, he was having an infield bike that is 1824, you can say 1824 year, right? At that point of time, his forefather or grandfather or grandforefather might have purchased that bike for 3000 rupees, which in 2012, I believe, he has sold, and you won't believe it, he has sold it for 2,50,000 rupees as a vintage bike, right? So in that case of scenario, he has earned the profit, or you can say the gain, right? In such case of scenario, that gain
Yes,
or
sir.
that profit is being
Check कर
taxable.
ले, ठीक है, टूटा उटा तो कुछ नहीं, मैं आपको दिखाता हूँ.
Yeah, Rakesh, saying something,
Sorry.
right? So the personal use asset, if there is a loss, that is your personal loss, but if there is a gain, that is taxable. Make sense?
Okay, sir.
Right? The middle one is wash sale. Have you heard this term before? Any of you have heard this term before?
No, sir.
No, sir.
Rakesh?
Sir,
Mhm.
before that, can you please confirm whether in case of personal gain, will there be any allowable expenses?
What type of allowable expenses?
Means let's suppose the sale price in your example was 2.5 lakhs and purchase price was 3K. So
Hmm.
let's suppose in between you have incurred some cost also to repair and maintenance in every year.
Hmm.
Will you get any deduction for same?
Yeah, if it is a capital nature of expenditure, you can add that into the cost. Yes.
Okay.
Right. So now coming to the wash sale. So this is more about, I would say, the shares, debentures, or I would say the uh, investment basically relating to that is wash sales. So when security are sold at a loss and replaced with substantially within 30 days before or after the sale, whereby the taxpayer or spouse of the taxpayer buy or acquire substantially identical stock or security in a fully taxable trade or for the taxpayer IRA or Roth IRA. Second is acquire an option or contract to buy substantially identical stock or security. Such losses are not recognized, rather they are deferred. And the deferred loss increase the basis of stock or security acquired. So what they are saying, if you have purchased any security, let's assume you have purchased 10 share of Tesla for $100 each, right? So the total investment is $1,000, right? And immediate after that, like sometime it happened that once you purchase in maybe 10 days or 15 days or 20 days, Tesla has declared dividend. And they have declared a dividend of, let's assume, 30% on each stock, right? So the $100 stock which you have purchased, you have received $30 stock dividend, right, within 15 or 20 days. So what investor generally do after the dividend, the stock value will go down, right? So the stock value will be $70 or maybe 71 or $72. And then at that point of time, you sell this share to someone else, right? And then after within 30 days, you purchase the share at higher value because the stock value keep on increasing. So this kind of, you can say, the transactions are being considered as wash sale when you purchase or sell the share within 30 days and you earn some short-term profit out of it, right? So that gain which you are earning is being taxable, but the loss which you are incurring are considered as deferred loss. That means in future, if you are, when you are selling those shares to some unrelated third party, so at that point of time, whatever is the actual gain or loss will be happening, that you need to consider for tax purposes. So the wash sale, the simple meaning is you have either purchased or sell the share within 30 days, and on purchasing or selling you have earned some trading income, dividend income, interest income, or any such profit. But after that, the same asset, same security, you will be selling at a loss in future, right? So that loss will be deferred in the future period when you are selling to any unrelated party. Make sense? Or it's slightly complex?
No, sir. The point is when you received a share in a dividend, you say that the average cost price of that share of your holding get reduced, but your overall holding price remain the same.
No,
So if you are
no.
selling,
This is about cash dividend, not a stock dividend. So Rakesh, this what we are discussing is cash dividend. So you have received the cash.
so again, sir, if I'm selling that dividend cash received in a
Hmm.
lower price and within 30 days I'm buying that same identical stock at higher price, then
Hmm.
I am in a loss, right? So, and you are saying
Hmm.
that loss is not allowable.
Hmm.
And
Yeah.
why would somebody is going to do that?
Yeah. So no, very practical question, Rakesh. For example, let's continue with the same example of Tesla. So you have purchased 10 share of Tesla for $100 each. Let's assume, right, on 1st January 2023, right? At that point of time, the face value of the share is, let's assume, $10 each. So your face value of the share which you have is $100, but your investment, the market value of share is $10,000, right? Correct? So after that, after your purchase, let's assume on 10th January, the Tesla has issued 30% stock dividend, right? So the stock dividend will be at what? At face value? Sorry, cash dividend, my bad, sorry. So Tesla has issued a cash dividend on 10th January, which is 30% of the face value. That means they are giving $3 cash dividend to each one of you. So the face value remains same. But on the other side, the market value of that share will probably go down by those $3. Right? So when you are selling those shares which you have purchased for $100, now you might be selling at $97. And you will say there is a capital loss. But ideally it is not a capital loss because you have already received $3 as a stock dividend. Now it makes sense?
I got your point, sir. Now I got your point that you
Hmm.
have received a $3 in the cash.
Hmm.
Just to cover that, you are selling some of your stock at lower value so that you
Hmm.
can claim loss. And that's
Yeah.
why
Yeah.
taxation team is saying
Because
that we
this
will
is,
not
yeah, in share
tax
market,
planning. You're
this is,
trying to make a tax planning.
yes, very true, very true. Because in share market, it is very natural and very common that when company issue the dividend, cash dividend, so their cash will go down, right? So as their cash will go down, their market capitalization will slightly go down. So the investor who is receiving the cash cannot say that I am at capital loss position. So that is the reason this wash sale provision have came. Clear everyone?
Got a point, sir.
Hmm. So far we have discussed about assets, type of assets, capital gain or loss, and the limitation stock dividend as well.